Hello, viewers. This is Rishabh Bhatnagar, and you're watching BQ Prime. IT services firm Coforge today has announced their Q4 and FY23 results. There's about a 50% sequential drop in net profits, but it's mostly on one offs, which is why the markets have also reacted kindly. The stock gained about 2% intraday. We have with us Sudhir Singh, the CEO of Coforge, with us to discuss the earnings and outlook. Hi, Sudhir. Welcome to BQ Prime.
Very, very good to be with you.
So you mentioned that growth during the quarter was broad-based, right? But you also mentioned that demand continues to be uncertain. Macros are yet to be fully resolved. So how do those two statements go together?
See, growth was not just broad-based, growth was also very robust. Our growth for the quarter sequentially was 5% in US dollar terms. So it's very, very significant. That's obviously created a very strong natural ramp into next year. All we need to clock to hit 15% is just 3% sequential over the last next 4 quarters. You look at our past record over the last 4 quarters, we've been growing at almost about, I'd say, 4.5% CQJ. So the way to reconcile it is we believe the macros are uncertain. We want to take a conservative view, hence the guidance of only 13 to 16% CC growth. The intent is, and we continue to be very, very strongly committed to A, trying to meet that guidance, B, hopefully try to exceed that guidance. I do want to point out the earlier point that you made. The one-offs this quarter are very significant. Most of them come from the fact that we plan to gift an iPad, an Apple iPad, to more than 21,500 employees to thank them for their contributions.
That's about 80 crores.
That's about 80 plus crores. You're right.
Sudhir, there's also about a 40% Q on Q decline in fresh order intake from the Americas. So how do you view that?
I won't parse data down to that level, right? The way we look at order right now is our order intake for the fifth quarter running is more than $300 million. The other way of looking at it is our order executable, which is the total orders booked, 100% committed, is $869 million, which is a record. Now, if you look at the last 6 year history of Coforge, the growth in our order executable, 12-month booked order book, has been very strongly correlated for the last 6 years with actual revenue growth in the next 12 months. At this point in time, our order executable is more than 20% higher than where it was at the same time last year. Hence, a lot of the confidence that we have going into next year, despite the uncertain macros.
During the presentation, you also mentioned going from 1 billion to 4 billion in revenues without adding a single client. So could you clarify what you meant by that?
No, we certainly can't go from 1 to 4 billion without adding a client. We were talking about the fact that the client set that we have right now, more than 61,000 clients, the wallet size that they represent is sufficient for the firm in a hypothetical thought exercise basis to get from 1 to 4 and even possibly even more if we were just to focus on them. So that's the size of the wallet that we already have access to, that we are addressing and that we hope to grow.
Lastly, Sudhir, you mentioned that after the SLK Global acquisition going well, you plan to be more aggressive in that space with inorganic growth. So what are your plans with that? What size are you looking at?
We're looking at firms that fall into the 5 sweet spots that we've identified. We're looking at firms in the low code, no code, the data, the Salesforce, the cloud, and the healthcare space. The last acquisition that we did was a firm with an annualized revenue of $73 million. The enterprise valuation we assigned to it was $195 million. We obviously since then have grown. The appetite therefore is higher, but we're not necessarily aiming at size itself. We're looking more at capability, in anything from about 10 odd million to about $100 million in terms of revenue would be fair game.
All right, viewers, that was Sudhir Singh, the CEO of Coforge. Thank you, Sudhir.
My